Portfolio Builder members, hope you had a great Memorial Day weekend. Today's trade alert is for the Diamond portfolio. Week over week, we are down approximately $80, and this is over a period where the stock market has had a huge pullback. So if we look at the start of May, we were at a $18,818 value in our account, and that was on May 7th. If we go to May 14th, we climbed up to $18,987, climbed up to $19,804 last Tuesday, and today we are at $19,766. And just to give you a feel for what the S&P 500 has done during this period, you can see how well our strategy does in terms of being able to protect profits. So over the month of May, we can zoom out and see just how rough it's been. Some stocks are down up to 40% during this period. And so we're sitting on about a 5% decline in the S&P 500. And during that period, we're up about 0.5% right now. And with today's covered call, trade alerts, we can jump up in profits again as the volatility spikes. We may have some short-term losses, which in this case we did not, but we lost $80 week over week. But relative to how much the S&P 500 pulled back, we're doing extremely good. You can see the covered calls from last week really paid off. Microsoft, we collected $325 credit, paid back $262 today. Apple, the covered call really saved our ass. We collected $11.05 and only paid $296 to buy that back. Facebook, $620, paid back $430. So you can see we had a huge profit on every single covered call. And so that protected our assets, and it was allowing us to basically go flat when everybody else lost a considerable amount of money. If you're hanging on to Apple, for example, you would have lost around $7 a share over the same period, and actually $8 a share. So the goal is to hang in there during times of volatility, keep riding the covered calls, because once the tide changes and the stocks either go flat or up, that's when we can accumulate huge profits during times of high volatility. So today's trades, we were most bullish on the Microsoft position. That's the biggest position in the Diamond Club. And this stock just keeps going straight up. Here is the chart of Microsoft. You can see it remains unscathed by the China trade war. And so this is a position where we don't mind short-term volatility in Microsoft because we are happy to hold on to it for the long term. So this one has a potential to return 1.39% week over week. And that's if we are pretty much assigned. On Apple, we are sitting on a smaller potential return, and we're also adding a hedge. So for every $150,000 you have invested in our strategy on the Diamond program, we're putting out a $500 insurance policy, which purchases 5 July 19 150 put options. So again, this is probably going to result in 100% loss on this, but I believe Apple could become the target of the trade war and see the most volatility. So while we can make a lot of money selling the covered calls, this will give us a little more room to sleep like a baby at night, because we can generate a huge profit if Apple starts to pull back like it did last Christmas. So let's just take a quick look at Apple. 20% of their business is out of China, and all their products are built in China, so it'd be very easy to cause some disruptions to this, to their sales and their supply chain. So if we look at that December crash, it went a little bit below 150, which is where we're buying this put option, and it expires in July. So this is going to only protect us very short term for a potential crash in June or early July. And so really, we want to exit that hedge sometime in June if things do turn for the worse. Now, if things turn around and go up, that's fine. We'll give up a small amount of our profits week over week over the next few months by having this hedge. So the next trade, and I did add a few things, the potential profit on each of these covered calls. Now, if I've sold a covered call that's above the strike price, That means to realize the potential profit, the underlying asset will have to go up in value. And so Cisco seems to be betted on heavily by Wall Street that they can now jump into this 5G race. And so that's why it's so bullish and the biggest potential profit for us. It's also a small position in the portfolio, so I'm willing to take more risk on those. The banks were selling at the money covered calls, so a little more bullish on the banks again, and the tech stocks were remaining relatively protective other than Intel and Cisco, who I believe are the biggest benefactors of this attack on the Chinese tech conglomerate Huawei. And so it's interesting for America to pull off what Huawei does. We have the phone companies, Sprint, T-Mobile, AT&T. Then we have the chip companies, Intel, Qualcomm. Then we have the router companies like Cisco. And then we have the internet company Comcast. Well, Huawei comes in there. They have spies all over the world who do nothing other than try to steal technology and sneak it back. And then they have these huge labs that reverse engineer everything, rip it off, put their own label on it. I mean, they even plagiarize Cisco courses and documents showing how to use their hardware. Verbatim, they just literally copy pasted it and started selling their ripped off versions of it. So this is definitely a big fight that's going to escalate, and I think Huawei is going to have some serious trouble competing without stealing technology, and now having basically all of the NATO allies turning their backs on Huawei. So I think it's going to be a huge problem for China, and they're likely to fight back by attacking Apple. And of course the phone company actually is Apple. So in America, we're breaking down what Huawei has done in a single company between like 7 giant tech companies. So it's it's like as if we've stabbed China in the back in terms of hurting their Apple, their Intel, their Qualcomm, their Cisco, their Comcast, and their phone carriers. Pretty much all jumbled up in one giant company. So to summarize, here's your strikes. These all expire next Friday. First step was to cover the positions. And if this is your first time following the trades, your first step is to buy 300 shares of Microsoft, 100 in Apple, Facebook, Intel, Cisco, 200 at Comcast, 900 at Bank of America, 500 at Wells Fargo. If you followed the trades from last week, cover them with the buy to close at market. And then you're going to sell to open the new covered calls expiring on June 7th. So here's your strikes per stock. Remember, you can only write one covered call per 100 shares you own. And then the last step is to buy to open, which means we're long the July 19 150 put option. So this is about a 0.3% hedge, not a 1%, but a 0.3. It's very small. To realize a profit in this, we need to see the Apple stock drop probably another 10 to 20 bucks before this will skyrocket from $1 in value, most likely up towards the $10 to $20 range, depending on just how low we go. Now, if everything goes smooth sailing, Apple just kind of trades flat for this week, we're going to make a great profit and we'll keep rolling over the covered calls. But if things do get aggravated, this is the single company I think is the most important to hedge in our portfolio to protect this composition of stocks. So that's our trade alert for today. Tomorrow we have our basic program coming out, and Thursday our whale program. So thanks for your time, and look for a new update later today. Also, don't forget we have a webinar at 1 Eastern. So thanks again.